Well, good afternoon, everyone. This is exciting. I'm Trevin Stratton, the Chief Economist at the Canadian Chamber of Commerce, and welcome to the Chamber's second public consultation for our independent tax review, this one focusing on central Canada. For many years now, a number of organizations, including the Chamber, and a number of them that are on the line today as well, have been advocating for a comprehensive review of the Canadian tax system. And for just as many years, governments have been unwilling or unable to undertake such a review. But within the context of COVID, its economic impact and its fiscal impact, we recognized a review cannot wait much longer. And we also realized that such a review does not necessarily have to be conducted within government, but can also be conducted independently, such as what was done with the Mearleys review in the UK and the Tax Working Group review in New Zealand. So that's why we're here today. As I mentioned, this is the second consultation. The first focused on Western Canada, and that took place yesterday, and elicited a number of big ideas for tax reform and the first steps toward finding consensus on principles for tax reform. And we're here to continue that conversation today with Central Canada. And to assist with this task, we've appointed 8 special commissioners that are here to consult with this group and to listen to their ideas on tax reform and what that discussion should entail. First is Tabitha Bull, the CEO of the Canadian Council for Aboriginal Business. Tabitha is unfortunately unable to be here with us today, but she's being represented by Patrick Watson from CCAB, who's their Director of Public Policy. We also have Gaël Campan, the Senior Economist at the Montreal Economic Institute, Carole Chouinard, Partner at Gowling, Pamela Cross, Partner at BLG, Francis Donald, Managing Director and Chief Economist at Manulife Investment, Jamie Golenbeck, Managing Director of Tax and Estate Planning at CIBC, Dr. Jack Mintz, President's Fellow of the School of Public Policy at the University of Calgary, and myself, Trevin Stratton, the Chief Economist at the Canadian Chamber. What I thought I would do is, first of all, perhaps go around to our special commissioners and ask them first to provide them with an opportunity to reflect on maybe the importance of doing things differently now, or the importance of undertaking a review of our tax system right now. And so, Patrick, why don't we start with you, Patrick Watson from the Canadian Council for Aboriginal Business.
Good afternoon, everyone. Welcome the opportunity to be here. As Trevin said earlier, I'm representing my boss, Tabitha Bull, today in this session. I just want to acknowledge that I am on the traditional territories of the Algonquin peoples, and I do give thanks to their ancestors and leaders, elders, past and present, for the opportunity to speak with you today. From the CCB's perspective, we've found that we need to allocate any opportunity that we can find to reforming the tax system to provide access to finance for Indigenous businesses. CCB has done a lot of research that would show that Indigenous businesses can achieve and support the $100 billion Indigenous economy if they had adequate access to capital. Apologies if I sound like I'm a bit off. I also have a child running under the table, so I'm good at managing daddy duty at the same time as being an intern special commissioner for today. So I'll say we'd certainly welcome the opportunity to be with you. So if you see my camera coming on and off, that's just because I'm also taking care of 2 young children at home. But thank you again for the opportunity to be here. Which.
Thanks a lot, Patrick. Gaël, why don't we go to you next?
Yeah, if the mic is still working perfectly, okay, good.
That works.
Yeah. Now, just for me, just to add a small note, I mean, I'm surprised that the topic of wealth taxes keep coming. So, but I will not, expand much. I hope we can discuss about other topic today. But anyway, yes, just my area of concern is probably the competitiveness of the tax system moving forward in this, post-COVID area. That's my main area of concern, with so many dimensions included inside, but that's my main point of focus right now.
Thanks, Gaël. Carole, why don't we go to you next?
So in terms of a tax reform exercise, a tax reform exercise in the nature of the Carter Commission is probably not something that, and I think we touched on it yesterday, Dr. Mintz did, it's not something that we're about to see in the next couple of years, let alone the next 5 years. as a lofty goal, but I don't see that happening in the next year, let's put it that way. Ultimately, I think if there can be simplification, that would be a goal to aim for. I mean, there are many provisions in the Income Tax Act that are very complex. I'd almost say incomprehensible. I mean, we touched on one yesterday. If you look at the courts when they're dealing with that particular provision, they usually start their decisions with a statement to the effect that this is the most complex piece of legislation they've, known to man and woman and humankind, I guess. And then you have CRA with respect to the same provision, who, when the amendments were made in 2015, took some public positions only to do an about face and turn around 360 degrees. And eventually what they did is they threw their, correct me if I'm wrong, Pamela, but I think eventually what they did is they threw their hands up in the air and said, well, if you want any kind of comments, you're going to have to apply for a advanced income tax ruling, which really is not acceptable. We shouldn't be in a position where we have to do that. So I'm all for simplification of different areas in the Income Tax Act.
Great, thanks, Carol. And Pam, I think you were name checked there as well, so why don't we go to you next?
Thank you. I approach this with a bit of a different lens. I agree, of course, with the complexity of the current rules and the fact that simplification would be welcome. But I also think that in our current situation, where clearly we will need to generate some revenue from our tax system in order to pay for the expenditures that we are going to have to pay for, I do think that economic growth and prosperity is where we're going to have to look. Growth solves revenue or tax problems and the ability to finance things. So I do think that if we can support a system that encourages economic growth and prosperity, I think we will be farther ahead. In that regard, I think you have to look at the tax system as to whether it's a barrier to that, neutral on that, or an incentive to growth and prosperity. And I do think things are very different now than they were 50 years ago when we did our last tax reform, both in terms of the globalization of the economy and the digitization of the economy. People can work from anywhere, people can make money in different ways, and growth can be something that you don't need to look at a geographical location to find it. I think the movement of human and financial capital will be key here to make sure we are competitive as a nation and able to encourage growth and prosperity in Canada.
Great, thanks a lot, Pam. And Frances, why don't we go to you next as well?
I am a macroeconomist, so I come at this from thinking about the broad economy, and I just wanted to highlight here that we are operating in the greatest economic crisis in modern economic times, and I say that without hyperbole. We are likely a long way from being able to implement any type of tax hikes. We need to be thinking about simplification and streamlining of the system. I generally think about the recovery as occurring in 3 phases. We are in the midst of the initial rapid rebound, which is where things look like they're doing really well and we're going back to the pre-COVID world. That is not the case. We will soon enter what I call phase 2, the stall out, where improvements are going to stall quite dramatically and this economy is going to need significant amounts of support. And then it will only be until we get a vaccine or we go back to an environment where companies are not needing to operate with social distancing that we can enter what I call phase 3, the new normal. So when we're talking about tax reform in this context, I'm really hopeful that we can keep these phases in mind and remember that what the economy needs right now, what the tax system needs in the next 3 months, very different from what it needs in the next 18 months and different what it needs over the long haul as well. So I'll stop there.
Great, thanks, Frances. And Jamie, let's go to you next.
Sure. The theme that I like to focus on in these things, of course, is the simplification of the personal tax system primarily, as I hear from people every week and from clients and from readers of my weekly column, is that, the personal system is just overly complex, and the average person can't deal with it. And there's just myriad of, credits, deductions, preference items, and things like that, all of them worth very, very little and cause a lot of frustration. And the theme that I'd like to push again is the use of the tax system to collect revenue to support government programs, as opposed to, aid special interest groups and lobby groups and things like that. And the second area of focus for me is just very, very specific. I don't expect a, 7-volume Carter Commission report in the next few years, but like something starting as simple as looking at the competitiveness of our personal tax rates, not just how high they are at over 50% in 8/10 of the provinces, but also looking at, when those levels of income kick in to make sure that we are competitive when we go back to post-COVID world. Can we be competitive with our neighbors, particularly to the south United States?
Great, thanks, Jamie. And finally, Dr. Mintz.
Yes, thank you very much. I've been involved with tax reform throughout the world, and sometimes, as a friend of mine once said, Bob Brown, that used to run Price Waterhouse, tax reform is really a process, not a one instant thing. And we have to remember right now we're in a very unstable situation, at least for the next year or two, in my view. And any tax changes that are being done right now, actually, when you look at what's happening around the world, are just some tax reductions in order to stimulate the economy, whether it's Germany lowering its VAT rate or the United States reducing the impact of its interest deductibility limitation that it brought in with 2018 tax reform. And I think the reason for that, of course, is that the focus of governments right now is get people back to work. And that's going to be the immediate issue. But then there's going to be the longer, more medium-term issue, and that is dealing with the huge hole that's been created with very large deficits that are now being created, and the fact that we will have to eventually move to a sustainable fiscal trajectory. And that can be done through a number of ways. It can be done through spending, and it can be done through taxes. Although many economists would argue that, especially if you look at the work done by, who unfortunately passed away this year, Alberto Alessini, is that the worst type of tax increase, or the worst way of trying to deal with deficits, is by increasing taxes. It can create long-run implications for loss in GDP as you hurt the private sector's confidence. And that eventually one has to do what we did in 1995, which is to control spending and let tax revenues grow with growth, and then we end up handling the deficit in that way. However, I've always argued that taxes can play a very important role in growth, and we need to put growth back as an objective in our tax reform. I think we've, for too long now, in the past number of years, have focused more on redistribution than growth. Redistribution is maybe an objective, but it's not the only objective of taxation. And of course, simplification is very important, but also we have to remember it's not that easy to do simplification if it means people end up paying, if some people end up paying more tax, because they don't necessarily want simplification if they're going to end up paying more tax. So you have these objectives that all make sense, but it's going to be trying to balance them that's going to be important. So in my view, growth really needs to be put on a higher plane now, at the front burner in tax reform, and I think this organization can help, push that message for the longer run.
Great, thanks a lot, Jack. And I see that there are a few questions coming in both through Slido and also with people raising their hands. I do see one hand raised, and so Rebecca, can you unmute the mic of Cameron Bishop? And Cameron, you'll have the opportunity to ask your question.
So my name is Cameron Bishop. I'm Vice President of Public Affairs for Organigram, which is one of the largest cannabis producers in the country, one of the legal cannabis producers. We're based out of Moncton. We employ nearly 700 people also nationwide. So I guess I'm curious to hear from the panel about how they would suggest making the taxation regime more competitive as it relates to this sector. I mean, ostensibly the goals of legalization were to drive out the black market, which still today has about 80% market share, while also keeping it out of the hands of kids. But we're suffering from a pretty strong headwind when it comes to taxes and fees. We have $1 per gram excise tax, on top of it GST, HST. We have a regulatory fee that's 2.3% of our gross annual revenue, and we're only in the first 2.5 years of legalization. So I'm curious to hear, if this is kind of being considered by the panel, in addition to corporate and personal taxation. This sector really has a lot of headwinds, and I'm curious to know what role we can play in a post-COVID recovery, but also what you would suggest this government does, or any government, provincially or federally, does to help help stimulate the sector, but also meet the goals of legalization. Thank you.
Does any of the commissioners like to take the first shot at that cannabis taxation?
Let me just make two comments. I wrote a piece a couple of years ago about excise taxes, or city taxes, as you might think of them, on alcohol, tobacco, et cetera. And that time, of course, cannabis was at the beginning stage. It's amazing, actually, how much federal and provincial money is raised through excise taxes like these. It's $27 billion, which is not that far at that time from the GST, which was over $35 billion. So, it is a huge source of revenue, and I suspect will be one of the areas that governments are going to be trying to rely more on in the coming years, because it's very easy to raise sin taxes compared to politically than anything else. And in the case of cannabis, I know that there is this issue about trying to shift away from the illegal market back into a legal market. And so governments really have to be very careful about the application of excise taxes here. The same problem applied to cigarette taxation back in 1993, when they became so onerous that what happened is illegal amounts were brought in through First Nation territories in Eastern Canada in order to avoid the cigarette excise tax in Canada. And of course, the government's ended up taking action by the federal government lowering its excise tax on cigarettes on a matching basis with the province, because not all provinces face the same sort of illegal importation as Ontario and Quebec did. So there was an accommodation made, and probably this is a good example where in tax policy you have to weigh how much you can take, because if you erode the base too much, then you're not going to achieve what you're hoping to achieve in terms of the revenue. So it would be a good area to sort of have some comment on in a report coming up.
Great, thanks, Jack. Did any of the other commissioners want to address that question? Okay. Then I will go to the next question, which is coming to us through Slido, and this one has been upvoted to be the number one yet. Yesterday, TOSI rules section 55.2 in succession planning were identified as areas begging for reform. What other requirements are small business tripping over? Any of the commissioners want to? Jamie, by all means.
Yeah, I'm happy to sort of kick this off. I know, I think Jack has comments on this as well, but I mean, one of the most complex issues, of course, is access to the small business deduction. And, a lot of businesses love it, and then they have to share it, and then they have to deal with associated companies, and they have to deal with a capital, if they have too much, $10 million or more, they get it ground down in the small business rate. There are some provincial differences. I think one of the provinces has a different rate. An enormous amount of planning and complexity goes around the small business rate. So, I mean, that's certainly something that I know that business owners find it challenging. I think most business owners like it, at least on the small business side. I know incorporated professionals love it, certainly for their professional corps. But I think that's an area that we could look at as well. And I'll just sort of stop there and let anyone else jump in on this dip, because I know it causes enormous amount of stress in terms of qualification. Ultimately, even when you sell a business and are qualifying for the lifetime capital gains exemption, the rules are extremely complex. And especially if you've got multiple shareholders and family members and using a trust and things like that, and requirements to have the 50% test, the 90%, this is very complicated stuff. The forms themselves are complicated, and it's an enormous amount of complexity. So I think that's been sorts of a lot of stress for business owners as well. So I'll kick off the discussion with those comments.
That's a great kickoff, Jamie. Did any of the other commissioners want to address either that question or Jamie's comments as well?
I'll just.
oh, sorry.
Okay.
Well, why don't we start with Pam and then we'll go to you, Jack.
I just have a sort of an additional area that I think small business has some trouble with, and that frankly is the GST regime is also extremely complicated. The rules are very convoluted, and because it's an immediate tax, you don't know if you've done it. It's difficult to plan sometimes how the tax is going to apply, and you find out about it after the fact, about whether or not you've dealt with the transaction you're doing correctly. So I just would like to add that as an area where that tax is one that small business trips over quite a lot. There's a lot of audit activity around the GST, and there is a lot of revenue gained in GST, but the rules are very complicated for small business to comply with.
Thanks, Pam. Over to you, Jack.
Yeah, just I guess this is a bit of a question for you, Trevin, and that is this tax reform focus just going to be at the federal level, or will it include the provinces and municipalities, given that the provinces and municipalities raise more revenue, own source revenue, than the federal government does these days? And so when you get to the small business level, of course, one of the critical issues are some of the profit insensitive taxes that small businesses pay, of which the property tax is a huge one. And in fact, every provincial government across Canada taxes non-residential property more heavily than residential property, because they don't like to tax voters, but businesses don't vote, people vote. And so it is a major issue that I could tell you in almost every province. And I think something should be certainly try to address this imbalance around property taxation, because it is a major cost, and especially hits small business hardest.
Yeah, no, very important question, Jack. And to answer that, so we had a view towards having recommendations at different levels of government as well. And that would be one of the reasons for having kind of the regional breakdown of these sessions too, if there are particular issues that are at the regional or provincial level or territorial level as well.
And maybe I can add to the list, although this is specific to corporations that do R&D, is the whole regime around the so-called SR&ED tax credits and the complexity around that. The fact of the matter is that many corporations will hire consultants to help them put their claim in, both on the technical side and on the financial side. So there's a whole industry that has developed around these SR&ED tax credits in the form of consultants to assist corporations in putting forward their claims. So that gives you an idea of just, how complex that whole regime is when you have to hire outside consultants to assist with it.
Great, thanks, Khalil. And I see we have quite a few questions coming in. So next, I would like to go to one of the people with their hands raised, Jan Westcott. Rebecca, can you please unmute his mic?
Thank you very much. Thank you, panelists. My name is Jan Westcott. I'm the president of Spirits Canada. We represent commercial distillers in Canada. We make brands that are sold around the world. I think currently we're in 200 countries. We are very much an export business. We are very proud of the fact that we source all of our grain inputs for our products entirely from Canadian farmers. And in different studies that have been done, we are a very high value-added manufacturing business. Not so much in terms of the production, but as we add the branding, we increase the value of our goods that sell all over the world. The United States is our single largest market. I'm pleased to say that we have the leading whiskey sold in the United States is actually a Canadian whiskey last year. And a few years ago, Crown Royal Northern Harvest Rye was picked as the best whiskey in the world by one of the whiskey experts. So the ad is over. We need to compete internationally. When Mr. Morneau introduced his indexation of excise tax on beverage alcohol, we were already running 65% higher on excise taxes in the United States. And the answer we get from the government is, well, you know, you don't pay excise on exports. That's true to a certain extent, but not necessarily true. Since the indexation went on, the gap between Canada and the United States and what they charge on excise on spirits has gone to 85% with no end in sight. And what this does, this strips money out of the industry in Canada to be able to go and spend in our international markets to promote our brands. So the question I'm asking is this something that people are seeing in other sectors? I think my sense is that it's easy to do on alcohol, as I think Dr. Mintz said, because people regard it as a sin tax. It's like a 19th century approach to grabbing the money without any recognition of the impact that it has on business in Canada. People in Canada are always going to drink. We know that's going to continue, particularly during the pandemic. The issue is anything that they're going to drink going to be made in Canada? So that's my question, is to sort of, can we have a look at this? Is this something happening elsewhere? My colleagues in the beer industry are suffering equally, as are they in the wine industry. Thank you.
Great, thanks for that, Jen. Did any of the commissioners want to address that question?
You shut him up, Dan.
No? Okay. Well, and I guess a question related to that, what might be about competitiveness more broadly, related to the industry, and obviously the escalator tax is one thing. Is there anything that can be done in the tax space when it comes to the competitiveness of our spirits industry or alcohol industry? Well, I don't, Jen, did you have, yes, sorry, go ahead.
One broad, I think this is, I don't have sectoral expertise here, but what Jen is highlighting is the absolute need to bring in the differentials across a wide range of corporate taxation. And, you know, I wasn't going to say anything because I don't have anything particularly of value add here, except to say that he's highlighting one of the most important macro considerations in our tax system. And I think the absence of response is not the absence of caring about that issue, but it's a pretty specific niche sector, but he's highlighting exactly what has to be applied to the broad sector as a whole, or the broad corporate taxation as a whole. And this is a key theme, is that we have to be, you know, comparing where our taxation sits relative to our global peers. And that's true on broad corporate taxation. It's going to be true on excise taxes. It's going to be true down to the smallest niche argument. So, you know, Jen, I just wanted to say thank you for bringing up this topic. I think it's extraordinarily important. And I believe that all the special commissioners here agree that global comparisons are absolutely key to our new tax reform. But unfortunately, I'm not a specialist beyond what's in my cupboard right now on your particular industry.
Thank you.
Can I just add a comment about competitiveness, because I think this is a really important topic. We dealt with that when we did the business tax reform back in 1997, and there's really two ways of thinking about it. One is that you try to have a tax that is competitive with your major competitors somewhere around the world. So if some gold industry has a low tax rate in, let's say, South Africa, then we have to have a tax rate similar to South Africa. And then if you have another industry that has a certain type of tax rate, then you pick that country or those countries to be competitive with it. The problem with that, of course, is that you end up with a very distortionary tax system where industries and business activities are all taxed at different rates. And of course, what happens is that you end up allocating resources to those industries that get more favorable rates, or business activities that get more favorable rates than others. And so another view of tax competitiveness is actually trying to have a neutral system, one where you're treating all industries the same in your own country. And it may mean that some of the industries are not going to be as competitive with some country around the world for some particular product. But then what you're doing is you're trying to have the most productive and most and least distortionary system within your own country. And we also have to remember is that when you do have high tax rates, that causes a devaluation in your currency. And that is not necessarily a good thing. Lots of people think that's a great thing, but it's not a good thing at all. I've always had the view that it's better to have a high currency and a productive economy where you're getting a lot of value added per hour worked than to have a low currency and a very low productive one where you're not generating a lot of income and your salaries can't compete internationally. But I think this is a very important subject, and I think it's something that the Canadian Chamber of Commerce is going to have to take its view on about principles. What do we mean by competitiveness, and how do we want to achieve it?
Great, thanks, Jack, and definitely noted. I do want to let the participants with their hands up know that I'll just get back to you in a second. I'm just going to go over to Slido, where we have a few questions coming in as well. This one is from Scott Knox, saying that the current tax system incentivizes automation of human roles, shred credits for tech innovation, or with the payroll tax applied to hiring employees. Should this be changed? Would any of the commissioners like to address that? So obviously this question has to do with automation, you know, with shred credits and with payroll taxes. We can potentially also broaden that to talk about, you know, innovation in the economy as well. And what you know, what factors do we need to take into account when it comes to our tax system too?
I am happy to make a few. Sorry, Jack.
Please go ahead, Pam.
I'm happy to make just a few higher level comments about this issue, because I think this is not in its, you know, the tax system does fund certain policy decisions that have been made, and you know, certainly there are incentives in the tax system for innovation that have been there for a while. The question really is, should those policy objectives be shifted, and should there be more incentives for hiring? I do agree with the comments made earlier that in the shorter term, there will be incentives that will need to be put in place to get people back to work. But I do think the nature of work is changing, and I would expect that the current COVID situation will accelerate that to some extent. So I'm not sure that the tax system is where you will look to solve that. I think that's going to be solved through, you know, the business community and just competitive business environments generally. But I do think that what has happened will accelerate that and will require certain tax, you know, initiatives to probably be put in place to make sure that that transition is done in a smooth way. But I'm not sure that this is something that can be, it certainly can't be solved by the tax system. And I'm not sure that taking a view that is, you know, trying to necessarily incentivize a number of people to get back to jobs that are not going to be useful in the new economy is where we want to be. I do see a retraining and a lot of other initiatives that we may or may not decide to put our tax policy behind, but I am not sure. I think that this has accelerated the change in our economy.
Great, thanks, Pam. Jack, did you want to add to that?
Yeah, I'll just be brief. Actually, this is a great book by Matt Ridley on innovation, and actually some of the best ways of spurring innovation is just governments getting out of the way in terms of regulations and taxation. On the tax side, we have to remember our high personal taxes are not exactly the best way of trying to generate more innovation. When you start taxing people more than 50% of their income, that really does start creating all sorts of incentives to try to avoid governments taking over half of the extra income that you can make from the activities that you do. And I think that's actually an area that probably needs to be addressed on the innovative front. The R&D tax credit, I'll be a little provocative about this. I'm not even convinced the R&D tax credit is a good thing. In fact, I think we should seriously think about getting rid of it. There is alternatives. There's grant systems, and in fact, the one virtue of a grant system is that you can have a lot of work done with small business to help them with business plans and things like that, which is done under the IRAP program and some of the others. And it's not convincing to me that actually the R&D tax credit has been that successful. Our R&D has been falling. It's not been going very well. I think we need a whole new approach to research and development in this country, and our past approach is not working. So maybe we should just get rid of the R&D tax credit already.
Okay, well,
Hi,
that
Trevor,
is
do you mind if I
certainly
jump
a
in?
bold idea. By all means.
Okay,
Thank
I'll
you.
wait.
So, and thank you everyone for allowing me to put Paw Patrol on the TV downstairs. Hopefully I could be a little more articulate now. Thanks for your patience. So I'd like to jump into just hit on a couple points that were made by Pamela about retraining. I think that if this is a bit outside of the conversation on tax reform, but if we are focused on retraining, it's very important that we take a place-based approach. And this was articulated by the OECD in a report the CCB participated in that was launched at Waitaki First Nation in January called Linking Indigenous Communities to Regional Development. It's on the OECD's website, so just go ahead and Google and you can read it all there. That, especially when it comes to Indigenous businesses, those in rural and remote areas, it has to be customized for those individual needs. One size fits all is really not going to assist First Nations, Métis, and Inuit businesses whatsoever. I actually like to pick up Jack's point in regards to the R&D tax credit and just thinking about how that idea for reform might have an opportunity to benefit Indigenous businesses. As I mentioned during my inarticulate opening remarks, there's certainly a need to have greater access to capital for Indigenous businesses. In the context of innovation and the need to invest in automation, the businesses are going to win that race are the ones that have access to the money to buy the machinery in order to scale up their enterprises. Indigenous businesses don't have the same access to capital as non-Indigenous businesses. So we have to look at ways that Indigenous businesses are going to be able to access the necessary capital, whether it be through access to stake, equity, or finance or otherwise, in order to get the money needed to buy the machines in order to stay competitive. Because a report that we just published, I think it was 3 weeks ago with Ryerson, showed that over 1/3 of Indigenous employees are at risk of losing their jobs due to automation. So this is an issue that's certainly hitting home for Indigenous peoples and Indigenous businesses. And I also like to have a conversation, maybe not necessarily within this context, but maybe in the coming days and weeks, about how we can utilize the tax system to incentivize high net worth individuals to invest their monies in Indigenous businesses. So I'll just kind of put that chip on the table. Thank you, Trevor.
Thanks, Patrick. Thanks. That's definitely useful. Sorry, was there, Carol, was that you that you wanted to?
I was just going to, just to follow up on the comments made by Dr. Mintz regarding the R&D tax credit, the shreds. I'm also of the view that it does contribute. I'm also of the view that this needs to be rethought. There are probably different and better ways of doing it. Part of my concern is that the credits are often used to, that's not to say that they don't, the companies that use them don't innovate and don't create new processes and new intellectual property. But often at the end of the day, that intellectual property becomes of interest to foreign corporations. So the Canadian company that's been receiving these SR and ED tax credits all along ends up being of interest to foreign entities. And what happens then is they buy the IP leaves Canada, the intellectual property leaves Canada. And so, and I'm talking anecdotally, but I'm seeing this in almost every transaction involving a Canadian company that has received SR and ED tax credits, where they're bought out, the IP leaves Canada, it's repatriated to whatever country. We don't get, Canada doesn't really, at the end of the day, get a whole lot of benefit out of that. So I think there needs to be a major rethink. I'll stop there.
Great, thanks a lot, Carol. I'm going to go to a question from someone with their hand up. Matthew Seddon. Rebecca, can you please unmute Matthew's mic? Go ahead, Matthew.
Can you hear me?
Yep.
Great. Thank you, Trevin, and the Chamber for the opportunity to speak, and thank you to the commissioners for taking the time to contribute to this effort. So I'm Matthew Seddon, I'm at Sun Life, and my question pertains to the financial sector. So Canada's financial institutions are subject to a capital tax, which is effectively a minimum tax preventing financial institutions from applying losses incurred during challenging economic times like the COVID crisis against taxable income earned in future periods. Now, payment of capital tax and the inability to efficiently apply these income tax losses represent a significant commitment of cash that is therefore unavailable for internal investment or to contribute to Canada's economic recovery. Would the Chamber sort of consider including a recommendation to repeal or to reform the capital tax regime? This is under Part 6 of the Income Tax Act as part of their recommendations.
So, Matthew, we're definitely considering all potential options when it comes to reform of the tax system. And what we're really trying to do here is find consensus amongst the public and amongst the business community when it comes to Chamber members as well. So maybe what I'd like to do is direct that question towards the special commissioners to see, if there is consensus or if there are any ideas related to that. Would any of the special commissioners like to address that?
Sure, I'll take the bait. So
Sure.
I'd say
Thanks,
first, thank you very much, Matthew, for your well-articulated intervention. As I just said, we would welcome any opportunity that would allow Indigenous businesses to receive the capital that they need in order to scale up enterprises, to innovate, in order to remain competitive and provide for the prosperity and well-being of Indigenous communities. So that's certainly an idea that we're willing to entertain and to further discuss. Thank you.
Thanks, Patrick. Anyone else? Any of the other commissioners? Nope. Okay, then next I'd like to go to Yana from Bombardier. Rebecca, can you please unmute Yana's mic? Go ahead, Yana.
Hi, thank you very much. So my name is Yana Lucachet, and I'm Manager for Government Affairs at Bombardier. So most of you may already know that Bombardier, we are the largest aerospace manufacturer in Canada, with the second largest industrial presence in the country. And I guess there's so many topics that we could touch on, but I think I'll focus mine just on one particular subject that we've been talking about and that has been raised is the R&D tax credits. And while I won't go into the details of the value of them or the lack or the non-value of them, I understand the different perspectives and the different realities versus small businesses and large businesses. But I did want to first premise and say that I really appreciate the comments made by Frances in her opening remarks about how our tax reform or how tax reform should be approached with the different phases that our economy is underway right now and will be going in the next few months and years. I think the most important and critical objective right now is getting Canadians back to work. And as a forward-looking way for government to consider and contemplate is how do we make sure that Canadians stay at work and how to make sure that Canadian companies continue producing made in Canada products. But back to my point on tax credits, if they're unsuccessful or if we have to rethink the way we approach R&D in the country, I guess I'm looking at more specifics on that, and perhaps Dr. Mintz, you can provide a little bit more color on this. How do we do it in such a way, I guess, sector specific to aerospace manufacturers? How do we remain competitive, knowing very well that our competitors, whether they be Airbus or Boeing's in Europe, in the US, they benefit from billions of tax credits. So this is what we're up against here in Canada. And, just airspace support in general in Canada has been dwindling for the past years. We look at SADE program, we look at SHRED program, we look at SIF. These programs are, the support for airspace has been lacking and dwindling. So I guess my approach is two-pronged. How do we support airspace and how do we do it in a way that is done through R&D credits or other?
Thanks, Yana. Would any of the special commissioners like to address that?
not very popular, I guess.
Oh. No, or anything.
Well,
Sorry.
well,
Sorry.
So, Gael, why don't we go start with you?
Yeah, so I just wanted to rebound on one of the remarks that Jack made before, is that it's a matter of philosophy. Either you try to find the niche tax obstacle that every industry is facing and consider what's going on elsewhere and try to match that, and you're probably going to have a chaos of exemptions and different rates. Or you try to have a centered and consistent approach where, okay, we know that some industries are facing, let's say, disadvantageous competition from, foreign countries trying to subsidize. I mean, the Chinese subsidize their banks, the Europeans subsidize their airspace industry. So this is happening, and it will keep happening in the future. The question is probably other ways, to support and encourage productivity development and R&D in the country, other than matching the evils that are happening elsewhere. And we might be able to encourage productivity and innovation, in another way than try to match the tax credit that the other countries are doing on their industries.
Any other comments on that?
I'll just add one quick thing. I mean, the argument for some support for research and development, and it doesn't matter whether it's the aerospace industry or whatever industry, is that firms, when they invest in innovative type activities, and which sometimes goes beyond what we mean by research and development, could be any type of innovation. We have to remember R&D is based on an OECD definition that leaves out a lot of innovation, such as let's say finding a new financial technique to issue, like derivatives to issue, securities that could be huge savings, and yet that doesn't get included as R&D. And of course, exploration and development by resource companies are not included as R&D. So if you take a more broader view of innovation to include all sorts of process or product changes, the R&D tax credit is actually somewhat narrow. And the argument really is to try to support firms, because when they spend money on their own innovation, other firms can benefit and other people can benefit, and they don't fully capture the returns. And so that's the argument for support. The question is how much support should be given, and where to give it. And if you go across countries, you'll often find, for example, in the United States, there is some tax support given for research and development, but actually it's much bigger when it comes to looking at government grants that particularly go into things like communications industries, energy industry, and defense, et cetera. And you find that also in other countries. So I think you need to look at a more holistic approach, but I think the idea really is we need to have an innovation climate in Canada. I totally support that. But I want to have an effective set of policies to achieve that. And it doesn't necessarily have to be done entirely through the tax system. In fact, when you look at Israel and some other countries that have successfully done it, there's a lot of regulatory aspects and government procurement policies, universities and technology institutes, et cetera, that there's a whole combination of policies that are put together to support innovation. And and in fact, not all countries have R&D tax credits and have special concessions under the tax system. They use other policies instead. So it's a much bigger set of topics, but I think we need to really rethink our whole approach to innovation in this country to make it much more effective.
Great, thanks, Jack. Were there any other special commissioners that wanted to address that? Okay. If not, I'll go on to the next question, which is coming through Slido from Ashley Challenor, who's from the Ontario Chamber of Commerce. Is how do we propose a model and or recommendations that remove the piecemeal aspects of our tax system and inject more intentionality and cohesion? Very important question.
I will start if that's okay.
Yeah, please.
And I think I just have a preliminary comment, because I expect there'll be lots of discussion on this. I think that the last topic actually highlights one of the problems with our current system is that it's being used to deliver a lot of initiatives that are not tax related. It delivers a lot of social programs and other initiatives that suit the government of the day. And unfortunately, whether you're looking at individual tax credits, as Jamie will not like, or he has his views about, or things like R&D to large companies, we have a system that is not focused on, collecting tax revenue and what are the tax measures that should be in place in order to ensure that there's enough tax revenue for the government to invest in what it needs to invest in. And I think we will need to go back to basics on some of that and say what are the core things that the tax system has to support. Start from there and then add on what you're going to do. But a lot of taking out the delivering social programs through the tax system is probably a good start to simplifying it and making it cohesive.
Thanks, Pam. Would any of the other commissioners like to comment on that as well? No? Okay, I'll go on to the next question then. Coming to us from Guy Legault from CALU, Canadian Advanced Underwriting Association. While focusing on economic growth and prosperity, what about more emphasis on consumption taxes, HST and GST, versus income taxes, which are a disincentive over 50%? Jamie.
I'll start it off the discussion. We've had discussions on this is obviously the hot topic, right? The question is, what is the right balance between income taxes and consumption taxes, HST, GST, right? Like I personally am a fan of raising the GST. And just, as we talked about yesterday, I mean, you adjust the exemption. So, I mean, the problem with the exemption right now is that it's completely incomprehensible to 95% of people who get the exemption, which are low-income people that are making, 10, 20, 30,000 a year. They get this notional, not even notional, I guess it's a real credit. It comes quarterly, deposited automatically. It's a bizarre number. We tried to calculate it when they got the special payment and people couldn't figure out why they got $10 less than they should have. And, it's supposed to, it's really meant to offset all the GST and HST that all the people in the lower income have been paying. Because when you look at the exemptions, rent is exempt, mortgage is exempt, food is exempt, children's clothing, a lot of things are exempt, right? So when you actually add up, if someone makes $30,000 a year, you figure out what they spend the money on, ultimately, they're not actually paying a lot of GST, HST. So when you calculate the credits that they're getting back, are they really paying anything net, or actually are they ahead of the game? So I think you can raise GST, HST a little bit, but then you adjust the exemptions and you make it more transparent and make it more obvious somehow. So that's my view on that.
Thanks, Jamie. Francis, over to you.
So Jamie makes an excellent point that if you were to raise the GST or HST, you'd have to make changes in the exemptions. Again, I'm really trying to contextualize a lot of our discussions today. We are in the largest economic crisis of all time. It has disproportionately hurt lower income individuals. So we should probably already be making changes to the exemptions, as Jamie has highlighted, and we should not be doing it quarterly. We're talking about families that are struggling to get food on the table on a week-to-week basis. They cannot wait 3 months. You cannot pay your childcare every 3 months. You cannot pay your groceries every 3 months. So we are probably going to have to make exemptions there anyways. I suggest that's probably a good way to go about this to start. But we also, in this context, we talk a lot about what's the optimal tax change decision. There's also what's a reasonable thing that can be passed in this political environment. And policies that do not or appear to disproportionately hurt those who are already on their knees right now, really suffering, is going to be very, very challenging. But I'm learning a lot from the special commissioners as well. And what Jamie highlights is a key component of this that actually should be changed. And even just paying out monthly instead of quarterly would be something that I feel could be a tremendous benefit in the current environment.
Yeah,
Great.
Trevor, I'd like to jump in there as well, just so that we can be mindful of the fact that income tax filing rates on reserve for First Nations are far below that of non-Indigenous peoples living off reserve. So therefore, there are a great many people on reserve lands who do not receive the exemptions, the sort of called HST, GST checks in the mail. So we would want to be mindful that if we are looking to increase consumption tax rates, that we also want to have a very strong effort to ensure that there's greater emphasis on filing for those individuals living on reserve so that they can benefit from the exemption. So just wanted to be mindful and make that point. Thank you.
Oh, thanks a lot, Patrick. Were any other commissioners that wanted to touch upon that one? If not, then I'll go to the next question coming from Brad Butt, Mississauga Board of Trade. Can the commissioners comment on sharing income and sales taxes with municipalities and whether it will make the federal and provincial tax regimes more complicated? Any comments on that? Jamie?
Well, the answer is yes. I mean, it's pretty simple. Yeah, of course it's going to make it more complicated. Like, does it mean it's the wrong thing to do? I don't know. I'm not an expert on municipal tax policy, but I mean, yes. I mean, you look at some cities that have a city tax that are geographically based on a sales tax, and there are cities that have a sales tax in a particular city. And then you sort of look at, do I buy it in the city? Do I buy it out of the city? So, I mean, if you're thinking about consumption tax in a city, I think it's very complicated. In terms of the bigger policy issues, I'll let one of my other commissioners talk about that. But I think it would add tremendous complexity beyond what we already have. But it's an interesting idea.
Thanks, Jamie. Any other commissioners?
I just want to say that value-added taxes at municipal levels would be horrific. You just trying to do crediting and everything else. The business community will be screaming if you ever try to do a value-added tax at the individual municipal level. In fact, one could do a retail sales tax, but we know that's highly distortionary. So we want to go back to really something we got rid of in most of Canada, except for Manitoba, Saskatchewan, and BC, that should be getting rid of their retail sales taxes and be adopting an HST. Then I don't think this is not exactly a wise move to at the municipal level. Can you do a different type of tax? Yes, there is. There are some possibilities. But that gets into a lot of issues. But we also have to remember municipalities can use user fees and exploit that more as well.
Thanks a lot, Jack. Any other comments on that? Then I will go to the next question from Steve Knox. Creative businesses could do with help on using local rather than bringing in US and UK based creative work for communication. This hits advertising and design badly. Maybe a bit more of a comment than a question, but did anyone want to address that comment?
I'll just quickly say that Quebec was absolutely right to introduce HST or QST on digital services being imported, like Netflix. We should be doing it at the federal level, and we should be doing it at the provincial level. It's not fair. When I get my Bell services, I pay my HST on it, or GST, but when I buy Netflix, it's completely exempt. That makes absolutely no sense whatsoever, and it will be a source of revenue for governments.
Thanks, Jack. Is there any other comments? I did want to ask one question that came in specifically about small businesses, and that's whether small businesses are going to have trouble complying with the tax deadline or rule changes announced during the crisis. Any comments on that?
I can tell you that's going to be an issue that's going to be very important in the fall when a lot of deferrals come off and a lot of businesses are still going to be strapped for funds. So it's a very short-term issue, but I think it's a really important one. And that's why I think even though a lot of the governments have given deferrals and one-time support payments to businesses and individuals, I suspect that we're going to still see some renewal of various programs in the fall particularly in certain sensitive areas where potential bankruptcies are possible. So maybe we won't have a $340 billion deficit at the federal level, and after 2021, or after March of 2021, but I suspect we're going to still see large deficits this year, much bigger than 340 as a result of these renewals coming up in the fall, and even bigger the following year. So we're going to have a bigger hole to deal with as we come out of this.
Thanks, Jeff. And actually, maybe touching upon that point, obviously, since you mentioned the fiscal atmosphere within Canada, I know there are a number of commissioners that are fellow economists. So here's an interesting one from Anonymous. Modern monetary theory, MMT, seems to generate some discussion in academia these days. What implications would its recommendations have for Canadian fiscal policy? Frances.
So what's sort of amusing to me here is that another way to think about modern monetary theory, I think of it like debt monetization, which is basically the government wants to spend money, it issues bonds, and then the central banks buy those bonds. And then you almost have like free money because there's always someone to buy the debt. And heading into COVID, this was like a fringe idea that very few people really subscribed to. People would call it the magic money tree, that it created all sorts of problems. And yet here we are in COVID, and the Bank of Canada already owns 25% of Government of Canada bonds. We are already in debt monetization. We are already there. Central banks are buying the bonds that governments are issuing. The United States Federal Reserve owns 16% of total US treasuries, and that number will climb. In Canada, they're buying almost the entire issuance every month, and that's probably going to sustain for a while. So when, as an economist, people ask me what's the biggest change from COVID, it's tempting to say, you know, work from home is changing, or we're not buying lattes on our way to work. But the fundamental change here is that we basically have central banks that are committed to debt monetization and are going to do that for a prolonged period of time. The implication is that interest rates are going to stay extraordinarily low for a very long time. So, you know, Dr. Minsta talked about this a little bit on yesterday's call. We don't have an urgency to try to get back to a balanced budget, in part because interest rates are extraordinarily low, and the cost of taking on all of this debt is very low as well. So while we're not, you know, officially calling it modern monetary theory, we're already there. It's not just academic. We are engaging in it large scale in almost every major global economy in the world, but we're just calling it quantitative easing. At least that's my take. I'm happy to hear rebuttals from other special commissioners who maybe we don't want to call it those things, but effectively we already have exactly what you're describing in action, and it began in about March or April of this year.
Thanks, Frances. It's a very, very interesting question. Do any of the other special commissioners have any comments on that?
Well, I'm going to add one maybe important comment. I agree with a number of things that Frances said. I mean, the issue is what banks do. We have to remember when governments end up getting the central bank to hold bonds, there's an issue about who ends up holding those bonds, and then whether they're relent to the private through the private sector. And that's where the money multiplier comes in, and excess demand, and that's where the concern comes over inflation. You know, we'll have to see down the road. We are in uncharted territories. But the interesting thing about modern monetary theory is that at the same time, they're really trying to give an argument for a lot of spending by governments, by the people that are proponents of it. But actually, I could imagine that you could also have a major tax cut instead. If we're not worried about the deficit, why don't we have a one-year tax holiday? Nobody pays any personal income tax for 1 year. There we go. Don't have to worry about the debt. Don't have to worry about the deficit according to the MMT theory. Why not?
Oh, that's another big idea that's come up here today. That's definitely an interesting one. Anyone else want to address that?
No, it's radical, but I like it.
Great. Okay, why don't I go on to the next question then? And so this has to do with whether we should be proposing reforms for giant tech corporate taxes, or I guess taxing large tech companies. What I might want to do is obviously that's part of the question. Is maybe also talk about digital taxation. Obviously, there's quite a bit of a debate taking place right now, both in terms of digital sales taxes and digital corporate taxes through the BEPS process internationally. I mean, what should be the Canadian approach to these issues?
I'd like to start off if I could.
Sure, Pam.
And I think I will just make two comments about this. The first is I do think that we have to be careful about what is a tech company and being sector specific. Many companies are tech companies that would, you would not necessarily think they are, but technology is everywhere. So I don't think you could, I think that taking a sector approach goes back to my comments before about what are we actually investing in terms of our tax policy, as opposed to where are we generating our revenues. I don't think it's helpful to necessarily try to define a tech sector, because I don't actually think that exists anymore. Many companies are tech companies. My second comment, though, goes to the fact that this is an area where global competitiveness is going to be key, because once you have a digital electronic commerce platform, you can do it from anywhere. This is not geographically situated. It is very difficult to impose taxes on a digital company, an e-commerce company, because if the tax liability is too high or too much of a burden compared with our competitors, it is very easy for those companies to move. So I do think that this is not a tech issue. This is a digitization of business issue, and it is a global issue because of the freedom of people to move, capital to move, businesses to move very quickly without a lot of, they don't have infrastructure to pick up and go. There's not the manufacturing, the plant, the physical presence that we have in other types of businesses. So this is something our tax system has to deal with, but we have to be careful how we view this issue.
Great, thanks, Pam. Any other of the commissioners want to touch upon digital taxation? No. Okay. On to the next question, which is, what about local production incentives to help Canadian businesses instead of importing? Is this a potential idea for reform or competitiveness?
I would suggest lowering the corporate income tax rate is a very good way of having a production incentive in Canada. In fact, that's what Alberta has done, and I can tell you it's already attracting companies internationally looking at Alberta. And if Biden increases the corporate income tax rate in the United States, 28%, if the Democrats win the House and the Congress next year, then Alberta is actually going to have the lowest corporate income tax rate in North America. And I think you don't need any special production incentives. I think you can just have just a much lower corporate income tax rate than we're doing right now.
Thanks, Chad. Any other comments? Okay. Is the U.S. Opportunity Zone model effective at mobilizing private capital for place-based investment? Obviously, I believe that came out of the Tax Cuts and Jobs Act. Any comments on that one? Actually, Patrick, maybe I'll ask you if you just want to give a brief explanation of the U.S. Opportunity Zones. Patrick Gill, sorry, not Patrick Watson.
No, I'll comment on that after, actually. So go ahead, other Patrick.
Sure, of course. This was a reform introduced in the U.S. after 2017, and their larger reform package done at that time intended to be able to mobilize private institutional investors' unrealized capital gains for local place-based investment in these geographic areas determined by U.S. states along different census tract data, just as a way of, again, the sort of the golden goal of trying to not only just mobilize public investments for public good, but also private investments. Ontario, I believe, is introducing a regional investment-based credits as of it was announced in March, and so now that this tool is at least on the radar of one province, is this something that we should be considering federally or other provinces themselves for place-based investment?
Thanks, Patrick.
Look, do you mind if I jump in?
Please.
Yeah, no, I actually wasn't surprised that you brought me in, because this is actually an idea that has been widely shared within the Indigenous community. So happy to comment it on. And Patrick, you did a great job explaining, because essentially what you're looking to do is create specialized economic zones, right? Call it what you will, but essentially that's what they are. And they've been around for quite some time. In the Indigenous worldview, you extend these economic zones across Indigenous nations because they can straddle international boundaries as well. This is quite hot, like I said, the creation of foreign trade zone regimes, free trade zones. Yes, there is a foreign trade zone regime within Canada already that's administered by CBSA, CRA. But in the U.S., it's very much localized. Like the Citizen Potawatomi Nation in Oklahoma has one specifically designed for that particular nation. So it's very, very hyper-localized, and it kind of connects to an earlier point about incenting local production. So without really knowing it, Trevin, you can actually hit on a point that we've been developing in terms of different ideas of how to make this work. But there is obviously the downside, which is when you have a foreign trade zone regime that extends across the entire country like Canada, it's far more productive. Right? Anyone can draw down these supports from coast to coast to coast. Whereas in the US, it is hyper-localized. You're stimulating particular local zones, although there is obviously the benefit for particular Indigenous nations within the United States of America, and this is where it's been picked up by Canadian nations. So just a bit of food for thought, but I appreciate you bringing me into the conversation somewhat unknowingly, but very interesting at the same time. Thank you.
Thanks, Patrick. Any other comments from the commissioners on that?
I think you have to be a little careful of free trade zones. I can tell you my story about once doing tax reform in Egypt, where they had a free trade zone in Said, and it was for value-added taxes, corporate income taxes, a whole bunch of taxes. And to make sure that you didn't get leakage to the rest of the economy, you ended up with 6 men on every truck to make sure that the goods were taken over to the Libyan border. And that was because you had the tax authority had to be there, and then the police said we have to be there, and the army said we have to be there, etc. But it's a great story to remember that the big issue actually is to make sure you don't erode your whole tax base doing it. So it might be that it might work for certain things like property taxes, and which is a little harder to get base erosion. And so then the only question is the effectiveness of it. But it is worth looking at. But I think it has to be done, I would agree, on a very targeted basis if it was going to work.
Can I just ask Jamie as a follow-up? Jamie, can either individual investors or institutional investors realize capital gains be made to work a little bit harder and incentivized while that gain is unrealized?
Just clarify your question. So what about the individual capital gains investor?
So as a follow-up to this opportunity zone model in the U.S., it's giving different forms of deductions or on your capital gains if investors shift their capital gains into these funds for place-based investment. Just playing off the notion that there is, I think it was I think it was actually Victor Ursier who was talking about $3 trillion in institutional investments sitting on the line. How can you make that money work a little bit harder in addition to what it's doing already?
Right. Well, I mean, this is one of the issues that we've talked about for years, both on the individual stock side, like the investors, and also for businesses. So one of the issues that the academics have been studying for about 3 decades, of course, is the capital gains lock-in effect. In other words, the disincentive to move capital from an investment that's appreciated, like shares of Apple, into something else because they don't want to trigger the tax. Whereas economically, it might be the right thing to do. So there are ways to do that, to incent people to do that on the personal side. But I think what we're really focused on from a business perspective is how do you incent a business owner to sell a business without triggering the gain? And maybe you look at things like reinvestment. So they reinvest that in another business. So you start a business, you grow it, you sell it for $5 million, you claim your lifetime exemption. What about the other $4 million? You want to pay tax on that right now? If you buy a sufficiently large arm's length business within 6 months, 1 year, can you somehow defer the capital gains tax? That's been talked about for principal residences as well. It hasn't come up yet as a hot potato topic on this call yet, but I mean, taxation of principal residences, I mean, what a windfall in Canada. If you have $1 million home in Toronto or Vancouver and it's worth 2 or 3 or 4 million, it's all tax-free. It doesn't happen in the United States. Like, there's a limit on that, right? So one of the solutions that's been talked about in the academia as well is, if you buy another home within 6 months, then you defer your tax, or maybe you defer a portion of that. So these concepts, I think, are very important. And I think these concepts could be, used to incentivize certain activities, whether it's rebalancing a portfolio, whether it's moving equity from one private corp to another, venture capital, things like that. So it's all on the table as far as reform, I think.
If I could just make a comment on that. I mean, I agree with these interesting ideas, but right now we have a system which already has a number of things that have been bolted and welded into it in a way that it is horribly complex and virtually incomprehensible to many. And to think about some of these ideas and actually try to integrate them into our current system is, in my view, a Herculean task. I would think we would have to dismantle some of the existing system first in order to simplify it before we could even consider adding some of these new ideas into it, because I do think it's horribly complicated now. It hasn't been reformed for 50 years. I don't see how we could ever incorporate some of these very big ideas into the current system. I think that would create a standstill in the ability to administer it, comply with it, advise on it.
Thanks, Pam. I do have a couple more questions. The first one is from Ashley from the Ontario Chamber. Should the business community be in favor of more taxes on consumption and carbon in order to lessen the load or dependence on income taxes? I know that we already addressed consumption, though feel free to mention that again. But maybe if we want to focus specifically on carbon, if there are any suggestions or comments based on that.
Maybe I'll start off with 2 points. The first one is that carbon policies are more than just taxation. There's a whole bunch of regulations that we're doing and subsidies and things like that. And I think we need to get back to some first principles on carbon policy about what is the most efficient way of applying one. And generally, most economists will agree that it's a cap and trade system or a carbon tax. You can have a debate about the two of them, but effectively they're the same thing, and they could result in significant revenues for governments. It has also been argued by economists over the years that you should use that revenue to help offset things like leakage to other countries. So lowering corporate income taxes with that revenue is a good idea, or giving some grants to support lower income people who are going to be paying higher prices for heating and electricity, et cetera. And so one could be using some of the money for that as well. But I think the key point, though, is, are we going to keep all these regulations in place and subsidies for electric cars and all that sort of stuff? And so it's a much bigger issue than tax reform. But to the extent that we were going to have, I think, a much more sensible carbon policy in this country, then I think we should be disbanding we're removing a lot of these new regulations or regulations that have been put in place or being contemplated, and subsidies, and really look at the least costly method of trying to achieve transition to a low carbon economy. And I don't know if you want to get into this as part of a major tax reform, but certainly the comment about using the revenues for reducing some of the harmful taxes to give a second dividend associated with carbon taxes, so it's not, or carbon levies, which do more than just deal with environmental issues, but also help, let's say, reduce the cost, economic cost of taxation would make sense.
Thanks, Chad. Any other comments on carbon? Or Patrick Gill, I see that you have your hand up.
Yeah, if you don't mind, another question. I just wanted to follow up on an idea and discussion from yesterday's conversation about maybe the merit of CRA conducting a little more evaluation of the cost and time associated with their different internal processes. Would any of the commissioners like to speak more to that, or what type of measurement might you like to see, or it has been done in a different jurisdiction on this regard?
Jamie, I think, has his hand up.
Yeah, I mean, the most basic measurement, I mean, would the CRA dare publish information is, like the estimated amount of time that it takes to fill out a specific form. So the US has been doing this for years. If you open up a US form or a guide, it said this form should take 13 hours and 4 minutes to complete, right? From learning about it, research, actually break it down in terms of like how much time. Like, I dare the CRA to publish that information, because it would be horrific for the average Canadian to actually realize. It would be front page of every newspaper in Canada. CRA estimates it takes 80 hours to do a tax return if you sold a principal residence that didn't fully comply because you had a change of use during the year and only half of it was rented out, and it was within 5 years you had an election to not change the change of use. I mean, this is crazy. So, I mean, I'd love to see that measure. Let them come up with some kind of, estimate on how many minutes. That should really spur in tax reform itself. When they add up all the minutes it takes to fill out, the form for, do TOSI. I bet you it's 35 hours to fill out the TOSI form if you paid $100 to your child from your dental corporation. So, I mean, like, that would be one measurement that they could do.
Yeah, other Patrick here, I entirely agree. I'm dead serious. I would love to see how long it would take to comply with rules and regulations, especially when it comes to Indigenous communities. We know that this is one of the greatest barriers to success that Indigenous businesses face. So I'm fully supportive of that. Thank you.
Just Jamie, your point on sort of declaring a different use of your principal residence. I mean, that section declaration letter that you have to do, you can't even submit with your tax return. You have to do it separately, and you actually don't know if you get a response back whether or not it's been seen and complied with.
Yeah, this is one of those bizarre anomalies of an electronic system, that you have to make these elections in the return. How do you make an election in an e-file? I mean, these are just some of these weird quirks of the tax system.
Great. Thanks. And then we have one final question from Guy Legault from Kalu. It's based on the, it was just deleted. But I do know, based on the experience and experiment of the CERB, is it time to consider social issues, example, guaranteed basic income simultaneously to policies supporting growth? And I will also let all the commissioners know that while we've been speaking on this session, that a Manitoba MP has submitted a motion to convert the CERB benefit to a permanent basic income. So any comments on that? Not necessarily directly related to reforming the tax system, but obviously, whether this should be in combination with pro-growth policies.
Well, I hate talking so much, but anyway, on the CERB and guaranteed income, we have to remember that, Milton Freeman actually had the idea of having a flat tax with a single demogrant given to individuals, which would be guaranteed annual income. And he argued it from a point of view of simplification. First of all, the flat tax would be simple. You don't have any credits. You don't have any deductions. And then if you have a Democrat, you would get rid of all other social policies, get rid of employment insurance, disability payments, social assistance at the provincial level, et cetera, et cetera, et cetera. And so I've done some calculations, and I don't have the numbers off the top of my head, but the big issue is how much do you give? If you give the so-called living wage, you'd give everybody $30,000, but then you probably, and I know you'd have a personal income tax rate if you wanted to cover that, even getting rid of all the other social policies in the system and all the credits, tuition fee credit, you name it. You name the credits, you get rid of them all. You would still have a tax rate of close to 50%. So personal tax rate, assuming that's the way, leaving all the other taxes in play. So it's a huge, but that's a very generous system. But if you go to something like $12,000 a year, then what about somebody who is disabled or somebody who loses a job? Wouldn't you want to give them more money? And then would you give more money to families as opposed to smaller, to an individual? So you start going through it and you end up going back to the system where you end up giving a special amount of money to every person. So it's a very complex area, and it's a great one for the Canadian Chamber of Commerce to comment on. And if you want to come up with your own idea about doing the guaranteed annual income, I think probably with a few $1 million, you'll be able to come up with a very interesting proposal.
Great, thanks, Jack. And yeah, this is, obviously this is being debated within policy circles. So we're definitely, I believe we might even have a policy resolution being voted on at this year's AGM on that. So we'll see how that goes and how that informs our national policy position on it. I see that we are quickly running out of time. So I did want to thank all the commissioners. We certainly understand that your time is very valuable, and so to take the time out of your day to do these sessions was very much appreciated by the Canadian Chamber and the entire business community and all Canadians. I did also want to thank the audience members for taking the time to attend today as well. The questions that you asked, the feedback and comments that you provided will certainly inform our document that will be coming out in the fall as well on recommendations and potential scenarios for tax reform. And so with that, thanks to everyone, and we'll see you potentially at the next session, which I believe is in the Atlantic region in a couple of weeks. Thank you.